What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you for joining me on Commitment FX today. I've got a fantastic video for you guys, a serious video for you guys on how to grow a small account using trading psychology, basic technical analysis, and the key fundamental idea of being patient. If you are a beginner retail trader, you'll know how frustrating it is not having that immediate capital to put up front to start your trading career. So follow these simple steps that I'll be showing you today to grow your small account into something that you'll be able to manage and make some good profits with along the way. So without further ado, I'll see you over on the chart. Let's go. Okay, so over here on the chart, we are looking at a pair that I have been following for a number of months for the reason that it is a fantastically trending pair, and that is the US dollar against the Turkish lira. Let's zoom it out a little bit, and in the comments tell me what you can see about this particular pair. I'll give you 5 seconds. So if you have left me a comment below, thank you. This is a pair which follows a very strong trend to the upside. You can see we're looking on the daily chart, and even from since 2016 all the way to where we're back testing currently at mid-August 2019, you can see that this pair has been on a constant trend to the upside. That's an easy pair for beginners to take control of because you already have identified the trend, and it's very easy to see when this trend breaks. I've put on there a nice and easy 200 period moving average for you to also see that this price respects the moving average also. So let's get in, back test with me, and I will show you how to grow a small account very easily. The first step then is identify a pair which you can easily trade. Now, as a beginner, we want to trade things that are easy to identify, that follow good patterns and are not volatile in terms of they one day go up, the next day they go down. So my first tip is have a look through the currency pairs available and find a pair which you've studied and understand and work out how it moves. In this instance, we're looking at USD Turkish lira. So on the chart, I'm going to be quite controversial here, but you'll see the benefits of it shortly. We know we're in an uptrend over the long period of time. We want to be swing trading if we're new to this game. If you have a part-time job, for example, swing trading, you can put less hours into the chart, let the chart do its thing and take some serious profits. So we can see that price has come back to retest my 200 period moving average. We are in an uptrend still, although we had this nice bearish move to the downside. We formed a double bottom and we are still making higher highs and higher lows along the way. We're now pulling back to this particular area. It's testing the 200 period moving average. What I like to do is get my Fibonacci from the low to the high, and we can see that we are also testing the 0.618 zone. So I'll put in a buy order. No need to put a sell order in. We do not want to be trading against the trend. So I'm going to be putting in a buy order. But before I put in a buy order, I want to see that the market is going to break this current structure. And again, I'm looking at it on the daily perspective. So we're still pushing down. We're in this retracement. Got this strong bullish pressure, wick rejection, and now we've broken above the previous high. So I'm going to enter a long order. Now, some of you are going to be saying, well, Lucas, why did you not buy at the dip? You know, we know, buy the dip, sell the highs. I'm going to leave a link below to a very good trader, Tom Hougaard, who says the market isn't like a supermarket where if there's a discount, we want to buy. Now, price has been discounted. We know we're in an uptrend, so price is only going to go up. But we don't want to buy it at the lowest low because it can push in the other direction. We don't want to buy the discount because there's no guarantee that that is the lowest it's going to be. We want confirmation on our side, especially if you're building a small account. You can't afford to be stopped out. So we've had a break above structure. So I'm going to enter a long trade, and a 1 to 3 is what I'm always after. But my stop loss, I'm going to have below the previous low and also way below my period moving average, my 200 period moving average, and a 1 to 3, which would put me about here. But I want to target the highs of the previous major high. Now this is going to take days and days to get to, But you're growing your account, it's only going to get bigger. We know this is an uptrend unless something goes drastically wrong. The stop loss is wide enough, so if I am wrong, I get out of the market quickly and away we go. Now what some retail traders will do is they'll have their stop loss and they'll keep pushing it down. If price is moving down, they'll keep pushing it, keep pushing it, keep pushing it. And they're allowing room for the price to move or breathe, but in so you're losing money. So we want the stop loss to be at a reasonable level to allow for some market movement, but if price does break below the previous higher low, we know we're wrong and we're out of there quickly. So we've had the entry. Let's see how this trade pans out. Okay, I'm going to pause it there. We are going very well. We've had this nice push to the upside. Some will be a bit fearful of this wick rejection, but I'm confident in the trade that I've taken. Now, here is how you grow your small account. Most traders, including myself when I first started, we've seen some money. We're seeing green in our account. We've made some money. Depending on your size, Turkish lira, it has a huge pip movement. So depending on your size, we are 43 pips or 43 pips currently above in profit. Now, some traders, they like to see the green. They want to close out. They've made some money and they're going to go spend it immediately. But let me change the way you think about trading. Instead of closing your trade, as many other YouTube traders will tell you, is to take profit 1, take profit 2. Let me tell you this. Lock in your emotions. You've put your initial balance on. Don't risk more than 4%. You've put your money on. You're happy to lose that 4%. But instead of taking money out of your winning trade, increase your trading size. We've identified that this particular asset, or the currency pair I should say, likes to trend to the upside. So we're confident in that analysis. Now some people will say here, Lucas, this go to break even. I would do that, but I'm not at that stage yet. But instead of closing out the trade or even taking some profits, what I'm going to do is I'm going to increase my lot size. I'm going to increase my order. So we've had this pullback now, slight pullback. Again, this is on the daily, so it's taking a couple of days. When we get that confirmation that the price is going to continue, the momentum's continuing with the bulls, I'm going to put in another trade. I'm going to wait for that structure to be broken. Again, this is intraday, a bearish movement, but we're swing trading, so we want to see an overall continuation. Okay, there we have it. Broken way above the highs of the previous bearish movement. I'm putting in another order. Stop loss, again, I'm going to have it below my period moving average, my 200, and my target, again, up here. Now, what I want you to think, traders, is to grow your small account, you need to understand how this game works. You have to remove your emotions, absolute, from any trade you take. We like to see profits rolling in, but what I am teaching you here is to lock your emotions down and see this as a numbers game. We want to make money, and if price is moving in the direction that we want it to move, why close out your trade and remove profit from this bullish movement? Add more money to it and grow the size of your position in line with the actual market trend. It's very difficult to do because I know as traders we want to take that money, see our account grow up, we're in profit. But instead of doing what you want to do the opposite. So let's continue. I'm putting another order. I'm in drawdown in my second order. It's no problem. Touching the 200 moving average. Stop loss was below. It's no problem. Again, this is a couple of days, a couple of weeks worth of trading. We've broken above structure. If we can break above here, I'll put in another order. Again, this is December period, so it's calming before Christmas, no problem. Wait for that price to break above. Had the first break. Okay, we've broken above. I'm not going to close out this order. Again, look how much profit we've made from here up to here. We've made some more profit here. And again, this is continuing. I'm going to put in another order. Stop loss below the 200 moving average. And what I'm going to do here is lock in the profits. I'm going to make that break even. This one here as well, I'm going to lock in the profits. Make that break even. Again, target initially up to this particular point. Now, why am I doing it up to here? Because this is the previous high. What I'm also watching, for those of you who will be burning or shouting a question at me, well, Lucas, when are you going to get out? Now, I've studied this pair. I know that when it makes this huge bullish push to the upside, which I am expecting it to do at some point again in this trading session, or say session, I don't mean a daily, obviously at some point during my order or activity on this particular pair. Now, when it does make this huge push to the upside, I have understood that then there is this retracement or calming period that will happen after the massive impulse to the upside. And when I see this massive impulse is when I'm going to close my trades. Okay? So again, continuing. I'll speed this up for you in the edit. Okay, we've made another retracement, no problem. If I break above the next high, I'm putting in another order. Okay, oh, I went too quick. We've broken above the high. I'm going to put in another order. Broken above. Again, stop loss. We're going to have it low. But we're here for the long term. We're growing our account. Look how much money we've made initially. We've got 1, 2, 3 lots of trades going on. Again, take profit. Again, up there. Okay, we're coming for the pullback. Simple price action. We may come for a retest around this area. Okay, we're broken structure again. I'm going to put in another order. Let's ride this, ride the momentum. Is the game I'm teaching you here. Ride the momentum. Keep your account size that you're never risking more than 2% per trade. Again, let's lock in those profits. We can't lose on these trades. 1, 2, 3, 4 trades, and we're entering into a 5th one. Target up here, at least. Okay, we are seeing some overextension, so I will get out on my particular area. That gave us a huge 1 to 6, I believe it was. And there we have it. I have taken over the course of almost a year. I've taken 1, 2, 3, 4, 5 trades. Yeah, 5 trades. 1, 2, 3, 4, 5. 5 trades. And I haven't lost a penny. Now, traders, if you're new to this game, one thing you need to understand is this is not a get-rich-quick market. Forex is a long game. The quicker you can grow your account, the better. The quicker you can blow your account, which is way easier than making your account, the worse situation you'll be in. I've identified here a particular pair which follows a very strong trend. The US dollar has always been a strong currency. Compared to the Turkish lira, a relatively small country, not a huge economic powerhouse, the US dollar will always prevail. I identified the previous major high or swing high, some of you may wish to call it. I've identified that price has found resistance at the 200 period moving average, rarely breaking below, and when it does, it comes straight back in. And I've taken a trade. I've held on to that trade. I've seen profit in my favor. I've seen my account in unrealized profit growing, but control your emotions and do not close those trades out until you have to. Again, 5 trades over the year, 1, 2, 3, 4, 5. And in those 5 trades, or in the first trade alone, you can see on there how much profit or pips I would have taken from that. That is a huge amount of pips. Now, I've not only done that with 1 trade, I've done that with 2 trades, I've done it with 3 trades, I've done it with 4 trades, and I've done it with 5 trades. All with a 1 to 3 risk to reward where possible, all risking 2 to 4% of my account. And over that year, my account has grown. Close it out on the major high, and you have grown your account dramatically with very little work needed. Now, the difficulty is, as a retail trader, is to control your emotions. We know that price will move against us at some point, but this is just a game. opened your account with your broker, you've set how much your account balance is, so you're happy to lose that if necessary. Risk manage, identify a pair which you like, you've back tested, and you understand how it works, and stick with that pair. I do have a lot on my watch list. Part of my Commitment of Traders Club is I like to give a range of assets, but there are a certain few that I will trade personally. I understand how they move and I understand how they work. And in doing so, grow your account size by keeping your trades going, increasing them when necessary, and don't close them out until you have to. I'll leave you with this one final point. We're all in this game to make money. If your market is moving up, increase your account, put another trade on in that direction, and sit there and be patient. Patience pays. I'll see you guys in the next video. Thank you for watching. Hit that like and subscribe. Join the Commitment of Traders Club to see exactly what the market is doing based on an institutional perspective. I only know that the US dollar is stronger than the Turkish lira because I have inside data as to the previous months of how the USD is performing. I'll see you over there, guys, and I'll see you in the comments. Until next time, bye-bye.